Hey, what's going on, everyone? D. Anthony here with Evolution Traders. In this video, we're going to start to break down some of these 20 SMA plays that we had in Evolution Traders this morning. I want to show you guys where you guys could have capitalized. I also want to show you guys where potentially you would have taken a loss, okay? And I want to show you where you could have potentially avoided a loss and turned it into a winner as well if you would have remained patient and had a little bit of discipline. Again, there's not a whole lot going on my screen. What I have here is a 200 SMA. I've got a 20 SMA, and I've got a 5-minute time frame chart on my screen. I'm located in California. Everything that I talk in is going to be in Pacific Standard Time. For me, I trade the New York session. I don't trade overnight. I don't trade London. I don't trade Asian. I don't trade after hours. I trade the New York session. What I typically look for is an hour before the market into New York lunch hour, okay? So between 5:30 a.m. and around 10 o'clock a.m. Pacific Standard Time is the sweet spot. But if I narrow it down just a little bit more, the first 2 to 2.5 hours of the market, I try to find my potential setups, execute, and have enough patience and discipline to walk away either with a small loss on the day or walk away with a small gain on the day and have the ability to come back and trade tomorrow. So if we notice here at 5:30, an hour before New York session opens, we get a close underneath the 20 SMA, okay? Now, in this particular situation, we're already trading below the 200, okay, bearish. We get a close below the 20, bearish. This candle, okay, is not a very big candle. Your reason for entry, your reason why candle is this candle here at 525. Your stop loss is going to be one of two places. It's going to be above your reason why or above the 200 SMA. And that is going to all depend on how many contracts you're trading and how much risk you want to put on the table. That decision is yours. It is not mine. Again, this candle is only a 12-point range. So if we're looking for a quick scalp, how many points are we looking for? 12 points, right? If we're going to risk 12 points, then we want to at least make 12 points. Next candle confirms, which would be your entry candle, and you would take your winning 12 points and or see if you can hold a runner. Obviously, we don't know that it's going to go all the way down here during this point in time. So again, if you can, be a little patient as it's streamlining, maybe you can take a little bit more than 12 points, 15 points, 20 points, so forth and so forth. Our next setup happens here. Reason why candle. Stop loss goes below the reason why wick. Our entry is going to be above the reason why high wick. And what we're doing is waiting for a following candle to confirm the reason why high. Once that gets confirmed, we're taking profits. We're taking profits into supply. On my chart, this next supply zone is a 200 SMA. That's where you're going to want to take those profits. Again, this range is a 33-point range. We're looking for something close to 30 points, okay? It doesn't have to be 33. It can be 25. It can be 20. It can be, 10. I don't really care. What I want you guys to identify and become very, very good at is identifying the reason why candle, setting your stop loss, locating your entry, and executing when it confirms and taking profits into supply. Get in, get green, get the hell out. Your next setup comes here. This is a losing trade. You're going to give back 40 points here. If you missed this trade and you took this long and you took this short, you will be break even and or down 10 or 15 points on the day. There's no harm, there's no foul. Now, how can we avoid this losing trade? Okay, there's a couple of things that we can look at. We can look at the previous swing high and tell ourselves that this bounce needs to get back over a previous swing high before we get out, and or needs to close over the 200 before we get out. If we are still trading below the 200 period moving average, 200 SMA, price action is still being weighted down. It's still going to be acting as resistance, because I wouldn't necessarily be looking for a long until we take out the previous swing high and the 200, looking for a back test and looking for a confirmation of that high to get long. So we could negate this losing trade by giving ourselves a little bit more risk in hopes of not closing over this 200 SMA. But again, that's all going to depend on how many contracts that you're playing. If you're playing one mini contract and you get in on this potential trade, you just got absolutely smoked on that bounce. Okay, so I would recommend, if it's a 40-point range candle, think about it in these terms. 40 points times one micro contract, you're going to lose $80. Okay, potential risk. 2 contracts is $160. So calculate how many contracts you want to put on the table before you even get into the trade, and assess if it's worth it for you. If it is worth it for you, put on your risk and let it ride to a previous swing high or a close over the 200, and or take your lumps and get stopped out when we break that reason why high. However, for the benefit of this video, and to say, you know, that we're not as bright as we should be because everything looks perfect in hindsight, let's say this trade is a losing trade. Okay, so let's say that this trade is a losing trade. This trade was a winning trade. Well, all we're going to do now is sit and wait for the next reason why candle, which is here. You're going to mark out your stop loss at the high of the reason why candle. You're going to mark off your entry below the reason why, and you're going to take a following candle once it confirms. Now, our entry candle does not need to close before we get in. All we're waiting for is price to break that reason why candle's low or high, depending on if we're going long or short. And then we're taking that range of the reason why candle, which is 36 points, and we're looking for something close to 30 points, 35 points on this potential move. And if you notice, this not only goes down 30 points, but it goes down a lot more than 30 points. So again, as long as we're not closing over the 20 SMA on the way down, as long as we're not closing over a previous swing high candle, then we want to remain in the trade. Entry is here. First move goes down. This candle never takes out this high. This candle, right, never takes out this high. So we could potentially try to squeeze a little bit more out of that. And even when, okay, let me draw something out for you. Let's say we ignore the pre-market. You weren't awake. You weren't at the screens, but you take a win here. You take a loser here. You're back in the positive on this trade here. So 3 potential trades during market hours, 2 winners, 1 loser. Get profitable. And once you get profitable, stay profitable by unplugging and coming back tomorrow. I hope this video helps some of you out there. I'll see the rest of you guys on the inside.